Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, June 6, 2018, and this is the daily report for gold and silver. Opposing forces of risk on and risk off have kept any kind of major move either up or down in gold at bay. Gold did close above 1,300, but only fractionally, 1,360 cents, down $1.60 on the day. Silver, with the industrial component, did well today, gaining about 16 cents, closing at 16.70, and the dollar continues to decline, down 27 points today at 93.59. The stock market continues to rage. The Dow is back above 25,000, 25,146, and that's with a gain of 346 points. And finally, nominal change in Bitcoin futures, 76.15 and 76.35 in the CBOE and CME futures exchanges. As we spoke about in our opening letter, there are absolutely opposing forces at play that are both bullish and bearish for the precious yellow metal. When we look at the cash market, for example, it closed up 10 cents today and is currently fixed at $12.95.90. That 10-cent change is derived from a weakening US dollar, adding approximately $3.40 of value, and normal trading or sellers actually moving into the market, taking it down about $3.30. Those opposing forces are certainly keeping current market pricing at bay in terms of the ability to rise or to fall to any great extent. August futures, which is what we're currently looking at, closed off by about $1.50 today, but did close above 1,300, although only fractionally at 1,370 cents. As we have talked about in the past, one of the greatest indicators that we need to follow closely in terms of where the future direction of gold is going to head is the dollar. Dollar is trading off about 0.25% today. 93.61, down about 26 points. And as you can see on this daily candlestick chart, we certainly have seen the US dollar come under pressure over the last week or so after hitting these highs just shy of 95 on the dollar index. And traders, then there is the risk on environment that has been so prevalent over the last week or so. We are looking at the Nasdaq Composite. We can clearly see a breakout from the former record highs, and over the last 4 consecutive days, we have seen the market move to higher ground, and over the last 3 consecutive days, we have absolutely seen the Nasdaq close at a new all-time record high. And so, traders, it is quite obvious that these opposing forces are keeping a solid level of support in gold, but limiting any real upside move. We have the North Korean and U.S. summit coming up on the 12th of June, and this weekend we have the G7 meeting. Both of those events could certainly provide the kind of fireworks that would be a catalyst to move gold to substantially higher pricing. My recommendation, therefore, is to maintain our current long position in gold and to maintain our current stop. Traders, the fact of the matter is that silver has an industrial component. We have had a runaway U.S. equities markets, and silver is reacting accordingly. Up about 16 cents today, closing at $16.70. However, there's a large caveat as far as I'm concerned. The highs have come under the 200-day moving average, and I would look for this particular price point, meaning 16.78, as a potential level of resistance. And then, as we've talked about continuously, we still have the 200-day moving average above the 50-day moving average. And lastly, we have seen silver trade in this defined area, and this current price point is certainly not a new high nor a new low for silver. I would look to see how the market reacts and a break above this particular level. But unless and until that happens, I remain neutral on silver. And traders, lastly, a quick look at Bitcoin futures, down about $100 today at $7,525. The key, as far as I'm concerned, is that there is potential for a real level of support to come into the market. We have seen consistent pricing above 7,200, and 7,200 has been our mark for the low. We were looking at a move to that price when the market was trading well above 8,000 and 9,000. However, until we see some sort of solid spike above this level of congestion, I still remain cautiously bearish on the market. A break to the upside, I would look at about 8,200 as potential resistance, while we have some support still at 7,200, a break below this price point. I think we would challenge the recent lows at about 6,500 per coin. Traders, as I wrote about in our opening letter, we have opposing forces right now that are both positive as well as negative for gold pricing. With the upcoming North Korean summit, United States-North Korean summit, as well as the G7 talks that are scheduled to get underway, and the dispute right now between China and the United States, we have a lot of geopolitical issues that could immediately heat up and definitely affect gold and create a major uptick in pricing. However, as for now, it remains steady at 1,300. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.